Welcome to another Disruptive Discourse video. Happy New Year everyone, and wishing you all a fruitful and successful new year, not just with your investments but also in every area of your life. Now for this video I'll be looking at what Ark Invest bought in the week of December 14 to December 18. As for the stocks that I've previously analysed and which they've purchased during this week, those are on the screen right now. Now onto the stocks that I haven't previously analysed. Ark bought 7 of those stocks, and in today's video I'm going to do something slightly different. I'm going to rate all 7 stocks based on their growth rate and future growth potential, with the stock having the highest growth potential being rated number 1 and the stock with the least growth potential being rated number 7. I would certainly love to get your feedback on this format and whether this is something I should do for future videos. The 7 stocks in alphabetical order are Apple Inc., Iovance Biopharmaceuticals, Kaspi Bank, Komatsu Ltd, Schrodinger Inc., Surface Oncology, and Trade Desk. So here we go. The stock that comes in at number 7 is Komatsu Ltd. Ticker symbol OTCKMTUY. Ark Invest purchased $0.9 million of stock on December 17 to December 18. The CEO is Hiroyuki Ogawa. Komatsu Ltd operates through 3 segments: equipment manufacturing, retail finance, parts and maintenance services. However, the core business of the company is the manufacturing of machinery and equipment. These range from quarry and mining machineries such as excavators and dump trucks to demolition machineries, waste and recycling machineries, construction and building machineries, and many more. You've got the picture. The company also makes autonomous machinery and trucks, and no doubt this is likely to be the main reason that Komatsu has been included in the Ark portfolio. This is a large cap company with a revenue that was growing, but then it saw a decline this year due to the pandemic. But nevertheless, its revenue grew pre-pandemic from $15.9 million in 2017 to $24.5 million in 2019, giving it a compound annual growth rate of 24.13%. Not bad for such a large company. But in my view, the other stocks being reviewed in this video have a much greater growth potential, and that is why this is rated at number 7. But time will of course tell if I'm wrong on this one. At number 6 is Apple Inc. Ticker symbol NASDAQ AAPL. Ark Invest purchased $3.2 million on December 14. The CEO is Tim Cook. It's safe to say that everyone knows Apple. They've been at the forefront of innovation with the iPhone, iPad, and Mac products. But it is Apple's subscription service ecosystem that has been the game changer for the company. More than half of its revenue comes from the software segment, with services such as App Store, Apple Music, and now Apple TV+. No wonder Apple is defending itself against Epic in the legal battle over the 30% royalty that Apple charges on all transactions that take place via the App Store. On a separate note, what makes Apple unique is its never-ending thirst for innovation. There are constant rumors of the next Apple invention, from the Apple TV to the Apple glasses, and the latest rumor is about the Apple car. Sam Corus, the Ark Invest analyst that specializes in EVs, robotics and energy storage at Ark Invest, had this to say about the rumors on Apple's car. Apple's Project Titan. Was Titan short for lithium titanate battery, and how would it compare to Tesla? Also important to note, Apple's rumored production would be 2025. Apple may be using this announcement to try and attract talent more than anything for the time being. My view, I would say make of that what you will. As for Apple's revenue, it is fair to say that Apple is the most valuable company in the world, with an eye-popping market cap of $2.24 trillion. That's with a T. Its revenue in 2020 was $274.51 billion compared to $229.23 billion in 2017, giving it a compound annual growth rate of 6.2% year over year. Now you might say, well, that's a lot less than what the previous company at number 7 generated, but nevertheless, Apple is such a huge company, and in comparison, that is a huge generator. Definitely don't bank on that growth rate remaining stagnant for too long. With the amount of R&D going on inside of Apple, you can be sure that at some point they'll strike gold with another product or service, and that would significantly increase their growth rate. And I'm betting that it will be sooner rather than later, and that's why I've got them at number 6. At number 5 is Trade Desk, ticker symbol Nasdaq TTD. Ark Invest purchased $12.4 million worth of stocks on December 14. The CEO is Jeff Green. Trade Desk provides a self-service cloud-based platform that allows buyers to create and manage digital advertising campaigns in various formats, including video, audio, and social media, and on various devices such as computers, mobile devices, and connected TV. Across all age groups, we're all beginning to consume information online, from streaming TV and movies to reading and watching news to playing games and listening to music. Most of these activities we do online. What this has done is to increase the number of audience eyeballs being purchased by advertisers online. And this isn't just limited to the tech giants like Facebook and Google, who account for 3 billion daily active users, but there's still the rest of the internet, and Trade Desk customers account for 4 billion daily active users, so they generate quite a bit as well. And these ads are not random, but they are in fact very targeted, which in turn increases the return on investment for advertisers who can focus the campaign at relevant customers. And the reality is that this is only going to get better over time as we continue to consume digital data at an ever-growing rate, and I think this is why this company is in the Ark portfolio. Trade Desk generated a revenue of $661.06 million in 2019, and in comparison, the 2016 revenue was $202.93 million, which gives it a compound annual growth rate of 48.24%. Now that's impressive growth, and as you can see, there is much more room for growth here, so clearly deserves a position number 5 in this list, and arguably could have been much higher. Coming in at number 4 is Schrodinger Incorporated, ticker symbol Nasdaq SDGR. Ark Invest purchased $12.6 million of the stock on December 17 to December 18. The CEO is Rami Farid. Schrodinger is a biopharmaceutical company that operates through 2 segments, software and drug discovery. Its software segment is focused on selling and licensing its software platform to other pharmaceutical companies. Schrodinger has pioneered a physics-based software platform that enables discovery of high-quality novel molecules for drug development at a lower cost compared to traditional methods. Schrodinger says that it's outpacing the competition by a wide margin and that it has the numbers to back it up. In its prospectus, the company said its software is used by 1,250 academic institutions worldwide, in addition to the pharmaceutical sector as a whole. Its drug discovery segment leverages its software platform in collaboration with some notable biopharmaceutical companies, some of which I've already covered on this channel, such as Twist Biosciences, Thermo Fisher Scientific, Takeda, and Bristol Myers Squibb. And all of these collaborations are involved in groundbreaking work that could result in new drug discoveries. Schrodinger's multidisciplinary drug discovery team also leverages its software platform to advance its own pipeline of novel therapeutics to address unmet medical needs, mainly in cancer therapeutics, with its molecules targeting ovarian, pancreatic, breast, and lung cancer. It has an impressive list of high-profile investors, such as Bill Gates through the Bill and Melinda Gates Foundation. And that suggests to me that this company is doing some groundbreaking work that's going to generate significant revenues for the future. As for its revenue, it is growing fast. In 2017, it generated a revenue of $55.69 million, and in 2019, that revenue grew to $85.54 million, making it a compound annual growth rate of 23.94% per year, and you could expect those to grow further in years to come. But this company certainly deserves its number 4 spot on this week's list. Coming in at number 3 is Kaspi.kz, ticker symbol GREYKAKZF, also LSEKSPI. Ark Invest purchased $0.6 million worth of stock on December 16 and December 18. The CEO is Mikhail Lomtadze. Kaspi Bank is a company incorporated and based in Kazakhstan. The company operates a payments platform, marketplace platform, and fintech platform. The payments platform helps facilitate cashless and digital payments transactions, as well as the transfer and withdrawal of money. And just to give this some context, all of the Visa and MasterCard transactions in June of 2020 only accounted for 34% of the money transactions in Kazakhstan as a whole. The remaining 66% of transactions took place on the Kaspi's payment platform. That is incredible monopoly for you right there. That level of monopoly in payments is only seen by companies like Tencent in China. Then there's the marketplace platform segment. This helps to connect merchants and consumers and enables consumers to buy various products and services from various merchants online. This is basically the Amazon model. The Kaspi app was the single largest point of online e-commerce retail transactions in 2019 at a gross merchant value of 46%. That is 46% of all online transactions done on the Kaspi Super App. Absolutely staggering. Right now, all I can say is that this company has the influence and dominance of a Tencent and Amazon combined in Kazakhstan. And you might say, well, why should I care about that? It's only Kazakhstan. But the point is, it's not just Kazakhstan, it's the surrounding areas around Kazakhstan, which goes into parts of Russia and goes into parts of China, and all connected by the same language. So there is a huge market there which this company can grow into. So definitely watch this space. As for the company's revenue, it generated $540.08 million for the 6 months ended 2019 to $712.05 million for the 6 months ended 2020, thereby giving it a compound annual growth rate of 31.84% over that period. There isn't enough data available to give a clearer view over a period of, say, 3 years, as is customary on this channel. It only recently IPO'd here in the UK on the London Stock Exchange market, which is why it is now available both to UK and US investors, and there is no doubt that the growth potential is extremely compelling. This is why it takes the number 3 spot on this week's list. Coming in at number 2 is Surface Oncology, ticker symbol NASDAQ SURF. Ark Invest purchased $8.9 million worth of stock on December 17 to 18. The CEO is Jeff Gota. Surface Oncology is another biotech company that specializes in developing drugs for the treatment of late-stage cancer. It's fair to say that the demand for these types of drugs will remain very high as long as the survival rate for late-stage cancer remains very, very low. And that's simply because we need more drugs that can actually cure cancer even at the late stage, and therefore pushing up the survival rate from the very low levels that it's currently at. Surface's flagship drug candidate is SRF388, which is used for the treatment of liver cancer. The company has recently received very positive news from the US Food and Drug Administration, FDA, who has granted it fast-track designation for the treatment of patients with liver cancer who have been previously treated with standard therapeutics without success. So this is really positive news, and the likelihood of this becoming a full designation clearly has increased. Furthermore, Surface has reached an agreement with GlaxoSmithKline to exclusively license, develop and commercialize Surface's SRF813 drug, which is another promising cancer-fighting drug. Under the terms of the agreement, GlaxoSmithKline will make an $85 million upfront payment to Surface. In addition, Surface Oncology may receive up to an additional $730 million in future milestone payments, as well as be eligible to receive tiered royalties on global net sales. This is a huge deal for Surface, and they clearly have a powerful set of cancer-fighting drugs that are worth paying for. So this is another company to keep an eye out for and may well be experiencing serious growth in the years to come. As for its revenue, because it's still at the clinical trial stages, it does not have a consistent revenue just yet, which is expected. It generated $6.63 million in 2016 and $12.83 million in 2017, followed by $59.42 million in 2018, and then $15.36 million in 2019. There's no point calculating the compound annual growth rate on these figures. As I said, you can't pay any notice to these figures just yet. This is a company still in the preclinical and clinical stages of its trials, so it wouldn't have a steady recurring revenue just yet. But just to give some context to this, the global cancer therapeutics market was worth $121 billion in 2017 and is estimated to be worth $172 billion in 2022. So yes, that's a huge growth opportunity right there, which is why this takes my number 2 spot. And finally, the number 1 stock of this week is Iovance Biopharmaceuticals, ticker symbol NASDAQ IOVA. Ark Invest purchased $22.6 million of the stock in December 17. The CEO is Maria Garcia. Iovance is another biotech company that is focused on therapeutics for late-stage cancer, similar to Surface Oncology, which we just covered. Its method of fighting cancer is quite unique in that it uses the patient's own immune system to attack cancer. TIL cells, which are referred to as tumor-infiltrating lymphocytes, are extracted from a patient's own tumor tissue, expanded through Iovance's proprietary process, and infused back into the patient. After infusion, the TIL cells attack tumor cells in the body to eradicate the cancer. So far, the company has released recent data from its clinical trials of skin cancer patients. These patients were those who have reached extremely advanced stages of their cancer and were pretty much near death, whereby the trials of all other types of drugs had failed them. 2 of those patients showed complete recovery and 22 others showed some positive but partial responses. Overall, the positive response rate was about 80%, which is extraordinary because there was no other solution for these patients and they were frankly expected to die. So this is another company, in my view, that is likely to see a significant revenue boost at some point in the future because its drugs are very promising indeed. Its drugs are not just limited to skin cancer. They aim to target solid tumors and blood cancers. They are currently conducting a pivotal study in patients with advanced cervical cancer, for which they've already earned the Food and Drug Administration's fast track approval for further investigation. In addition, the company's TIL therapy is being investigated for the treatment of patients with locally advanced, recurrent or late-stage cancer, including head, neck and lung cancer. Suffice it to say that they are targeting a huge cancer market, and any success would be extremely significant indeed. As for the company's revenue, it isn't currently generating any revenue, literally zero revenue, but don't be alarmed. The company is sitting on a pile of cash. As of December 2019, its cash and equivalents was $307 million, and as of now, that figure is estimated to be approximately $714 million. The projected future sales revenue is being forecasted to reach $1.5 billion by 2026, and if that turns out to be anywhere near true, then this is without a doubt a sign of huge growth ahead. And for me, this is why Iovance has earned the number 1 spot, as in my view it has the best growth potential amongst the 7 stocks that I've reviewed in this video and which Ark Invest bought in the week of December 14 to 17. Thank you all for tuning in and supporting this channel. 2020 has been a good year for me, and I certainly would love to see the channel grow even bigger in 2021. So please continue to smash that like button and subscribe. I'll see you on the next video.